morning everybody, it's Christian from Serene Education with the 4 majors notes update for the 22nd of March 2013. Hi folks, good morning to everybody on this bleak wintry day. Still feels like it here in Wales. It's going to be going over the 4 majors for this Friday, end of week. Let's have a look and see how this week has progressed for Euro against US dollar. Quick look at our weekly charts. What have we got? Well, we know the past 3 weeks in particular, price had found support at this 1300 here, psychological run number. And what we've seen this week is price spending more time below it. So that negative sentiment is still playing through. And you can quite clearly see now on our weekly time frame, the CTC template is giving us a sell signal. So, however, we've got to see this weekly candle close. It's still in play. We still have a full day of trading here. So we've got a red arrow, red candle as we speak. And the histogram on the other side has just gone red. So as it stands at the moment now, the more price spends below 1300, the more likely is price is end up going to be more bearish long term. And if we do see a break below this 50 period moving average here near term at the 128500 mark, we will look towards that all important 1275 12700 mark down the bottom here at this morning star formation. So as it stands on our daily, let's cross over. You can see the bullish move into the upside. This major trend on the daily from August of last year has been broken near term here in mid-February, and since that failure to rally above the January high, and prices reverted to the downside. In doing so, finding support near term, consolidated support at 1300. You can quite clearly see a very messy month, no, almost a month here at this level. However, you can see the past week, price is spending more time below it, which is a negative sentiment. It is finding support near term though at the institution moving average. And be aware that as long as price is trending above the institution, there's more likely for positiveness to be in focus. So we need to get below this level here, the 200 period moving average at 1285, and for price to remain below 1300, which I think will be the case, and we should see price heading all towards the downside next week, towards that all important price support and resistance level here that we saw in November last year, roughly around the 12700 mark. So look to see for a break below this consolidative range here, consolidation intraday, roughly around, I'd take it, I mean, we've seen 1285 as the lows, but get those bodies wicks close below this 128700 mark on our intraday. Should stem quite well for negative sentiment for the new week. A 4-hour chart, you can quite clearly see a lot more red than blue. However, a lot of speculative trading. You can see not really decisive, and you can see a very tight range just recently. However, as I mentioned, always draw your major support and resistance levels in. You can quite clearly see my weekly is plotted in, and you can see that price spent a lot of time above it for a period of time. However, you can see near term price is spending more time below it, so that's very negative. Institution above price, which is also a negative sentiment. Swing lows, which dictates negative sentiment to the downside. We do need to see price now breaking below this 1287, 1285 in particular. If you want to get below all those consolidators in this, get below the 1285, and then we can head towards that all important 1270 coming into the new week. So at the moment now on our hourly, price has just been consolidative on the Asian session, not really going anywhere, not breaking yesterday's lows in fact. However, the institution is still above price, and the all important 1300 is still above the price action itself. So bearish engulfing a couple of hours ago, it has failed to break that 1287, sorry, the 1285.50 mark. We'd like to see price trading below that. If we don't, there's more likely for price to actually turn around now. And as things stand at the moment now with Cyprus, still failed on the first bailout plan. They're looking to come through with a plan B. I think they've actually wanting to, I mean, this is just rumors, that they would like to actually leave the euro altogether. They want to try and set up some sort of deal with the Russians. Unfortunately, they haven't been successful in finding that deal with the Russians overnight. That's just rumors. You can look at it for what you think. But as it stands at the moment now, the ECB, etc., are requesting or need Cyprus to make up their minds as soon as possible. So it's going to be very, very interesting to see where things are going at the moment now for Eurozone. So be aware of that, and the longer this goes on, the more likely it's going to be more negative sentiment playing on price, and we're going to see more, we're hopefully going to see price spending more time testing those lower lows, and that could set us up nicely for those long-term trades for next week towards that 12700 mark. On to sterling, let's have a look at the week. This one over here, you can see price finding support near term after the break of that major support and resistance level here on my weekly chart at the 15300 mark. Quite clearly through latter part of 2010 right through to currently, we've seen price actually finding support. However, near term price broke below it quite aggressively, and we've now seen a major bounce or psychological bounce at this price support and resistance level. Fib ratio, in fact, here at the 14,8500 mark. Price is now making its way up towards that, the 15,200, and also towards that 15,300. As long as price remains below 15,300, the sentiment is still very much negative. We've seen a major drop over the past couple of months, since January, in fact, and it's going to take a lot of good sentiment to try and get this pair back into positive territory. So as it stands now on my daily, I want to see price trading below the 15,300, which is this black line. However, you can see there's a lot of consolidation within that trading range, as the weekly fib 78.6 level here, this dashed line, is in play as we speak. And we also have the 100% fib projection. So this move over here to this consolidative range, you could take in the January high to this consolidative range higher, back up to these highs here, and you'll notice that 100%, this other dotted line through here, has now been breached, and sure enough, we've seen a lot of consolidation. As long as that consolidation still happens below 15,300, then there's more likely for price to continue to the downside as the more resistance she finds at these levels. There's a lot of work here. There's a lot of resistance above price at the moment, and things at the moment now. Near term, we've seen some good positive figures coming out of sterling. However, it's going to do a lot more than that, because unfortunately sterling is very much tied up in the euro, and the longer things happen with the eurozone, the more likely it's going to catch up with sterling later on, etc. So at the moment now, trading below a major support and resistance level. Look, we are seeing a pullback, an intermediate pullback on our intraday time frames. You can quite clearly see our swing high. 2 days ago we had an indecision candle, and then yesterday we had a nice decisive candle to the upside. However, being capped by that 15,200, which is that fib ratio, that weekly fib retracement area. As long as she finds resistance here, as you can quite clearly see she has in the past, there's more likely for sentiment to drain now, or to waver to the downside, to the bears again. And then we could look for potential intraday trade back towards the 1505 mark, which happened to be price support and resistance intraday, before we see that 1485, that weekly monthly target being retested in the new week. So it's very, very important. If we are to see any positive sentiment on this, we'd like to see price trading above 15,300. Until such time as that's doing it, we should be looking for negative sentiment to be the port of call intraday. So look at your intraday, look at your time frames, your 4 hour. Here we go. You can see 15,200. I've put it in blue across the board for this time frame. Bit of upside movement. The major intraday time frame for this particular pair has been broken. All importantly, the institution moving average, we can see price spending more time above it. As beforehand we had price trading above it, it failed to really take that on and to move with it. Here you can quite clearly see price has been consolidated over a period of time, and that's all taking place above the institution, which is a good sign. So as long as we have that intraday positiveness, we need to see price heading up with it. Now we want to see the momentum taking price above 15,200 in particular. However, and more importantly, getting us above 15,300 if sterling is genuinely being. But I feel this is just a correction, a near-term correction. We are still bearish at the moment because we are still below a major support and resistance level. So therefore, we should be looking for negative setups. Okay, so longer price finds resistance here at 15,300, the more likely price is going to fall over. So if that does the case, then we should be looking for bearish engulfing shooting stars, etc. on those time frames, evening stars, something along those lines, giving us clear exhaustion, and then we should be targeting that back towards that institution, which happens to be our 1505. Get below that, then we're targeting that all important long-term weekly target, monthly and weekly target down here at 14,8500. On to the US dollar Swiss franc. Let's have a look at the weekly for this particular pair. US dollar gaining strength near term through February, right through to where we are currently now. You can see price breaking above this all important near term support and resistance level here at 940. We've been here before, but price has failed to actually find support at this level. Once breaking above it, failed on the pullback to find that support in order to see price reverting to the upside. We did get everything in our favor here. Everything was looking for fantastic. So we had the breakout, the pullback, but that continuation candle failed to materialize, and we saw price reverting to the downside. We are seeing the same scenario here, guys. The breakout, the pullback. However, we want to see this week finding support above here now. As long as it maintains above 940, there's more likely for price to keep on heading up for the near future. So on our daily, we want to see price spending more time above the 940. Let's have a look at that daily time frame. There we go. You can see the 940 here in the red. All important major psychological support and resistance level here at 930 in place. However, you can see near term a lot of buying sentiment for the US dollar against the Swiss franc, and in doing so taking us above a price support and resistance level. Also the institution moving average, and you can see the last time we were above the institution moving average was in September of last year. So good sign, that positive sign for the US dollar. However, you can see near term after breaking above that institution moving average near term, You can see price has now faltered. We've seen a lot of speculative trading for the US dollar against the Swiss franc. So not really taking those highs and moving with it as we've seen previously. 950 has been a major hurdle for price recently, and you can see that quite clearly here. In November we had a major high at 950 and price has come unstuck. We saw a break, however we failed to see price actually finding support here and moving higher with it. So all important, as long as price still maintains above that 940, above the institution, there's more likely for price to continue to the upside. However, we want to see price moving above 950 in order to see a genuine buying sentiment coming through. You can see we've had 3 consecutive days of indecision, spinning tops, which means it is very indecisive. We don't trade indecision, we trade decisiveness. We want to see either a bearish engulfing candle. A close below 940 would not be a good signal, but ideally, because everything's setting up for US dollar long against the Swiss franc, the US dollar has been getting a lot of strength against most of its cross pairs. We'd like to see a bullish engulfing candle above 950. Failure to get that candle above 950 means we're still in a consolidative range, and if we're in a consolidative range, we are not going anywhere. Okay, so it's pointless trading it. We want to see a decision. It's got to be a clear one, up or down. End of story. Okay, so that's it on US dollar. Swiss franc, rather put an alert on either side of these lines over here and just walk away from this one until such time as it gives you the alert. Last pair of the day, US dollar, Japanese yen. Let's have a look at that weekly. Here again, as I mentioned, sterling, the US dollar really gaining strength against its counterparts, and sure enough against the yen in particular. The yen has been very, very weak against most of its cross pairs, and a good trading opportunities against yen. So the US dollar here, and this is a monthly chart, guys, breaking the Fib retracement areas from the 2007 highs to the low here we've seen through 2011, 2012. The 23.6 Fib actually here at 87 being targeted, near term broken above, and then heading towards that 38.2. This is this 38.2 area here on the Fib retracement is where we're seeing a lot of indecision at the moment. If I go to my daily, you can quite clearly see that. 94 is that 38.2 level. You can see a lot of resistance through most of February. We saw price pulling back towards the 23.6 Fib retracement and staying above it, and then we saw another push to the upside towards that 9400 mark again. In this case, breaking above it and moving higher, however, being capped near term. We spent an entire week going sideways, a lot of indecision. We had this bearish engulfing candle, therefore we saw an intraday opportunity to trade back towards the 94 as a very aggressive against the market trend trade. You can see near term we saw some positiveness, buying sentiment after we saw price finding support here. We had the breakout, the pullback, and then the continuation. However, that continuation has failed to take it higher than the current resistance level that we've seen here over the past week. Last week in particular, a lot of resistance here at 96.50. Price has failed to get above it. Yesterday, we saw a bearish engulfing candle for the US dollar against the Swiss franc, which has left price now trading, looking back towards that 9400 mark. You can see that price is now looking likely to re-attempt 9400 near term. So intraday, let's have a look and see. Yep, a lot of selling through yesterday. In fact, taking us back towards the institution moving average on our 4-hour time frame. You can quite clearly see that price tested it yesterday, last night, in fact, at 9 o'clock GMT, and then we saw further selling through the Tokyo session or the Asian session back into the institution. Get below this 94.50, then we should be targeting that all important 9400. As you can quite clearly see, a lot more blue across the board here, but we are seeing a lot more red. There's 2 occasions we've seen red now. We're still above the institution. I think if we get a nice bearish engulfing candle close below 94.50, target 9400 for the foreseeable future. Back towards that price support and resistance level, that 38.2 Fib retracement level that we saw on our monthly and weekly time frames. As long as price stays above 94, then long term there's still positiveness in this trade. Near term there's negativity because we're failing to actually break higher highs, and in doing so we're creating low swings, and in doing so we should be looking back to the downside or trading aggressively to those major support and resistance levels on our intraday time frames. So wait for a nice consolidative break below 94.50 and then look to trade towards the downside towards that 9400 for the foreseeable future. Otherwise, that's it for this week. I hope you had a fantastic trading week. A lot of news out of Cyprus, a lot of iffiness out there, a lot of speculative trading. Still haven't come up with a plan yet. Plan A was rejected outright on the first day. Plan B is still in circulation. There's talk that Cyprus as a whole would rather stand aside and leave the euro. There's talk that they'd rather go with the Russians. There's a lot of Russian investments. A lot of wealthy Russians have now moved to Cyprus. So there's all this speculative talk that they're trying to make a deal with the Russians. That far better go the side of the Russians and actually stay part of the EU. That remains to be seen. So at the moment now, Cyprus is definitely going to be the talking point for this weekend for the foreseeable future until a deal is thrashed out. Tokra wants something to be thrashed out as soon as possible. The longer this drags on, the more negativity and speculative trading you're going to see, which is not good for Eurozone globally. So not good. Otherwise, please look at your fundamentals. As I mentioned, also, if you are using this particular template, please back it up with sound money management, guys. Very, 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 very important. Okay, so without further ado, have a fantastic trading day. Have an even better weekend with family and friends, and I will see you first thing on Monday morning for further analysis. Until then, trade serenely.